Good morning, traders. It is 8:04 a.m. Chicago time, 9:04 Eastern U.S. It's Thursday, the 16th of February, 2017. As always, I really appreciate you joining in and being a part of the community and the broadcast every morning. We've been doing this for about 3 to 3.5 years. I don't remember. But it's been very interesting just sharing with people what I'm doing every morning, and those who've been around for a while have probably noticed that the key here is routine and habit, adjusting it as necessary, but always sticking with the same routine and plan every day. It's what builds your career, in my opinion. At least that's how it's always been for me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance is to the risk-averse side. It's really the numbers are really mixed. The U.S. dollar is weakest at $100.75.5. Followed by the mini Russell down 28 basis points or 4.1 points. Crude oil's leading the pack at 53.88 on the April 2017 contract, up 52 basis points, followed by the euro, Japanese yen, and gold, as well as the bund. And that's why I'm saying it's allocating to safety this morning a little bit. But then again, we saw that over the last few days, and then the stock market kicks in, and the market resumes its rally and continues to push higher. As I said yesterday, jokingly, the trading plan these days is to buy a little bit after the open, 9:15 Central, 10:15 Eastern, and go take a nap for the day. That's pretty much the winning trading plan. This is a market for investors, not for traders, so to speak. We're not getting clear rotations up and down. The market is definitely feverish about buying and continuing to buy. We're trading around the 2350 strike on the S&P. Tomorrow's option at expiration. Yesterday was VIX futures expiration. Probably part of the reason why the VIX is gapped up yesterday and has gone up with the market. But this is the world we live in right now, and this is how it is. As far as what the news is telling us, Bank of Japan's governor is warning about low rates, says that challenges are likely to emerge. A new challenge has emerged in the form of low profitability of financial institutions. The development suggests that a different kind of financial crisis could happen in the future. Goldman Sachs is at an all-time high, trading at 250.70. And overall, Snapchat reprices its IPO from $14 to $16 and so on. As far as the news that came out right before the U.S. Economic releases today, we got initial jobless claims at 239,000 versus 245 expected, so better. Continuing claims 1.076 versus 2.076 versus 2.05, which is just slightly worse. And then we also have January housing starts 1.25 million versus 1.23 million. But the blockbuster this morning was the Philly Fed business outlook. The Philly Fed business outlook came in at 43.3 versus 18. This is the highest reading since January of 1984. Again, the Philly Fed, 43.3. This is the business outlook, a survey of businesses and how they see things proceeding. We see a lot of euphoria here, 43.3 versus 18.0, highest since January 1984. New orders on the Philly Fed are at plus 38. This is the highest since February 2000. Remember, March 2000 is when the dot-com crash came along. Plus 38 versus 26 prior. So really impressive numbers there. As far as what we're expecting for today, on the calendar, We're looking for EIA natural gas at 10:30 Eastern. We're looking for Fed Speaker Williams at 3:10 p.m. Other than that, the calendar's fairly clear this morning. Let's take a look at what we expected yesterday versus what we got. Yesterday was starting to shape up on the overnight. It was starting to shape up to be a potential uh, neutral day to stagnant. The expectation is that we remain inside of the prior day's range. That did not happen at all. Complete failure on that plan. It just didn't work out this way. The expectation is that the market is looking kind of heavy. Given the overnight stance, the overnight push to 2340 and was pushing lows. With the pre-market position for safety, it created this opportunity to look for a push down to 2323. That did not work out at all. And then, of course, that brings us to our secondary hypothesis, which is the more of the same. Again, we're in this, let me draw that better. We're in this constant channel up here, straight up after bouncing for a few days last week. We just keep ripping higher, and Hypo 2 is a continuation of that, and that's what we got. The expectation was for it to get to about 23.45, and it ended up pushing to 23.50 and holding prices up there. And then Hypo 3 was the hopeful one, just kind of balancing out, and then eventually looking for it to start spilling over. And moving towards 23.1275. Okay, here's what actually happened. Exactly, Hypo 2, an open auction here, and then the only real test was the rotation down to the open, and then it breaks the OS high, breaks the prior day's high, and the only real opportunity is right here. And I got to tell you, we were discussing this in the S5 chat room before it happened. The only thing is I just did not see anything in the order book that said that this may get some support here, and I'm going to show you that on Bookmap here in a minute. But the market pulled back to a confluence of the prior day's high, prior day's close, the current day's mid, the current day's VWAP, which to me is a setup with confluence and good for at least a 2-point rotation. It moved 3.5 points, and it moved through by about 3 ticks. So it gave about 2.5 points on that particular trade. With a runner that would have potentially finished about 14 points higher. The market closed at highs, trend day, profile again, multiple distributions, with the point of control remaining at the low. Now, over the last few days, we've had a point of control that has remained at the lows, and the expectation overnight was for the market to continue to extend its run up. But if you look at what the market has done, here's a point of control that's near high. So this is a natural way to finish a trend day, and we expect higher on the next day. And then here's another one, point of control near highs, and then what you have is a point of control at the lower distribution, point of control at the lower distribution, point of control at the lower distribution. And on a daily bar, this looks like the market is going full strength ahead, but I'm going to tell you that with the point of control remaining near lows and less participation as price increases, this normally, and I emphasize normally, indicates that a neutral day is around the corner, and it's likely to continue lower. And this is the beauty of volume profiling, is that it reveals the actual intent, not just the prices, the intent through prices, but the intent through volume. Remember, price is king, but volume is is the really the power, the confirmation, or the assertiveness of the market on what the king decides, what price decides. And so with the point of control remaining near lows here, I'm going to tell you that this is starting to look like it's weakening. Again, I am not a bear. I'm not a perma bear. I'm not interested in any given direction. It's taken years for me to shed the need to have a bias or to trade from a bias. However, I know from my experience that rotations down are much more tend to profit much more quickly and tend to give in rotations, and also rotations down tend to bring us back into areas with the volume profile present and a composite and a microcomposite, and gives us more information. As we continue higher, you've noticed these broadcasts have become really monotonous and really boring, and that's just, there's nothing I can do about that. It's just the way of the market right now. There's nothing here that says, hey, sell short and leverage short. I just don't see that at all. But take these as warnings. These lower points of control as the market pushes through highs. Take these as warnings that a lot more trading is occurring at lower prices, and we are not dragging that value up with us as we move along through the day session. A normal profile for a trend day is a small distribution, a bigger, and then it ends up balancing for the rest of the day so that it looks like it balances, break, balance, break, and then it just balances into the end of the session. That's what a normal trend day looks like. Okay, so that's my point here. Just pay attention to the fact that your volume point of control is staying near lows, and I think that's an important thing to watch. We have a lot of naked points of control beneath us, a lot of repair to be done to the auction. The auction is one directional and imbalanced, and it's been running for 6 days or five or 6 days. I looked at this last week. So we have a break higher from bounds, and we have 1, 2, 3, 4, 5 days in a row that are closing in a trend, and the probabilities are not in this. This is an unusual occurrence for it to continue to run like this, especially since we don't have clear news like the Fed reducing rates or something like that just yet. I'm not seeing blowout earnings or anything like that. This is euphoria. The market's pricing in tax cuts and a favorable political climate to the market, and so the OTF is in full effect right now. Okay. So to look at this, I'm going to take a quick pullback here, since there's not much you can gather from these trader bites other than the fact that they are just repeating every day. I want to look at this particular setup here. Okay, you're gone. I want to look at this particular setup here on the replay of Bookmap, and this occurred. We see the first pullback at about 10:45 Central right here. This is the first pullback. Again, this is the push to 43, and then the pullback to this clear setup, of course, after the fact. So as we watch this go, you'll see that there was no bid down here in the 37 area. Participants are not stepping in front of this and taking it on. So as the market came down here, this is, again, this to me is one of my key setups. As the market moves lower, you don't see buyers stepping in. As the market moves lower, you notice these areas are getting dark. The bids are being pulled here instead of loading up and meeting this price, and so it rotates up to 3.5 points here to 40.50 from 37, and then it kind of lingers. It kind of lingers before it starts to float up, but there's no real bid beneath it. So it's just the way it's set up here. It didn't give a clear opportunity to hop on to this excellent setup down here. The size, you notice the size is coming in after the fact. No clear collisions, nothing here to indicate that I should stick my neck out. So that's a wasted opportunity there. And then here it is back to the high of 43, 42.75. Oh, let me turn down this news feed. 42.75, and it just runs away for the rest of the session. So as we push through and look at these CVDs, just volume increasing and increasing, and that means people are trading on the offer, lifting the offer, lifting the offer. This pullback right here, doesn't get much attention on the sell side on the CVD. So this pullback occurs on price, but no volume. CVD rising again into the close with price, showing that the buyer is still dominating. The overall cumulative volume delta is just continuing to rise. I think the day before it finished plus 70,000 on the CVD. That's a huge number. It's a third standard deviation figure on the buy side. 70,000 on RTH in the regular trading session. On the ES is very, very rare. So again, the strength is very high. Here's the wall, right? Here's the wall, the closing range trade right there. You see these machines kick all in at the same time. You see how this wall starts forming right here. That's the market makers coming in on the closing range. And you notice that the book gets a lot thicker during that period. So, and here we go into the closing range trade. It gets really noisy. This is when the book is getting stuffed, and the reason it's getting stuffed mainly is because people have to balance out their positions and liquidate for margins and risk in the overnight. So that's a demonstration of why this looked great on the chart, but just did not give the required or needed setup for a push to get long, and so there's no participation there. Here's the ES. Here's the ES overnight again. Same old. We have a very balanced profile. The market opened, touched new highs. It extended the highs we would expect it to do, and then here we are below the mid, below VWAP, and looking kind of bearish underneath the point of control. This would traditionally look like a pullback to mid and a continuation lower. However, that's what set us up for Hypo 1 yesterday, and that did not work at all. So it's not a systematic, or it's not a normal auction. Currently, the market just comes in and wants to buy it up continuously. So with that being said, and no clear evidence that there is selling dominating in the overnight session. By the way, when we look at the overnight inventory, on volume it's balanced, and on price it's just slightly lower, so there's not much balancing to be done on the open. So this is going to have to be an open auction and push, pull, push, and then we're likely, in my opinion, once we push higher, we're likely to get stuck in this 2350 area, and that'll be your Hypo 1 for today. Okay, and any pull down is likely to be bought at this point. There's a lot of room to the downside before things change. We're still one time framing up, and are not able to consistently hold price down. Okay, secondary hypothesis is an open auction, push higher, fall back in, and then I'm going to be looking for the opening price back down here, fall back in, hold the opening price, and if it breaks below the opening price and extends the range down, in other words, the initial bounce low or the first hour's low gets extended, now I'm interested in looking for areas to get short. But if you get short, you need to keep them light and tight, and you'll want to not, in my opinion, I'm not going to hold those shorts into the close. The market has tended to bounce back up. Even if it falls, it tends to bounce back up on the close, and that's Hypo 2, okay? So what's key in Hypo 2? A test above the prior day's range right up here, a break through the open and in a break through the opening swing low in the IB. Now we've got something that has a high probability of a continuation, and that's the trade that would be short, but only short term. Overall, you're looking bullish across the market. Okay. Last thing, man, these trader bites getting really long. Last thing, I've included in the description of this stream on YouTube. In the description, there's a recording that was done from Tuesday that shows how I'm using the theoretical average, a TIA indicator, how I'm using the theoretical average to manage risk while in a live in an open trade. I think you'd be interested to see that. It's how professionals do it. It's called controlling risk with size, and you're just campaigning around a position to keep your scratch price or your break-even price as far away from the market as possible. I think some of you might find that enlightening. Good luck today, and I'll catch you tomorrow. Stage 5 traders, we have our webinar, our AMA, weekly AMA at 1 Eastern. The invitations have already been sent. Take care.